Sonia Luna here with Aviva Spectrum, wanting to share some of the key elements of what other prospective clients and even current clients really view to find out what is the true impact of using a product like BlackLine in terms of its staff and, more importantly, some of the operational impacts that they want to achieve when they do purchase BlackLine. The value proposition, really the number one key takeaway is you should be spending a lot, not just a little, a lot less time on matching the obvious. So if it's bank recs, credit card, revenue rec, et cetera, POS detail, items, those items, if you're spending days or several hours on those items by a certain number of headcount, this is the key takeaway from the perspective of the impact to the staff. They get to actually use that time instead of matching the obvious, really working on those anomalies. Also, clarity on tasks and updates. So when we go into the office, most of us know, okay, this Monday through Friday, this is exactly what I'm working on, etc. However, when it comes to those team update meetings or the pings via, those instant messages, and you're trying to tell your boss where you are in terms of the status, instead of giving them kind of a general overview, they have actually a clear picture. Not to mention the productivity of those meetings, that when you do have those status meetings with those folks that are, let's say, off-site, the productivity and the quality of the time spent really hammering out where the bottleneck is taking place, that seems to be one of the biggest takeaways and value propositions with a product like BlackLine. And then the flexibility. In other words, you can share items, you can create teams, etc. And there's also a seamless workflow. In other words, instead of having this one big gigantic spike towards, let's say, the end of the month or quarter, you can actually smooth out the workflow with all your team members. So how do they measure success? I wanted to share a few viewpoints based on my discussions. One is the audit committee, the CFOs, and by the audit committee, some of the common metrics that they're most concerned about using a product like BlackLine is the new accounting treatments and the impact to using BlackLine. What about those high-risk accounts and the audit procedures that impact them? They want to know the risk management issues. So is it a group of accounts? Is it, let's say, disclosure items within certain accounts that you're reconciling, etc. SOX 404 external and internal audit issues. They want to know, are you going to be minimizing things, increasing workload? Hopefully you're not, you're decreasing it. They want to know the impact of journal entries, especially since last minute issues sometimes come about because of journal entries. They want to know how the team is handling the reconciliation process and minimizing, let's say, the human error element to journal entries and locking down, let's say, complicated spreadsheets. Also, when you're doing the account rec process, how much of it really is going to be auto-certified versus suggested or recommended items to match. They want to know the metrics of how the team went before, let's say, pre-BlackLine to post-BlackLine. They want to know, well, what was the measure of success for those high-risk and complex accounts that you were able to get the system to do some of the work. And then certification statements. We all know that for publicly traded companies, it's a highly regulated area to be in. And the PCAOB issued a audit guidance on what do you do with controls, right? And we simplified it, called it Audit Alert 11. As you know, those high-risk, complicated account recs, the certification statements should be an easy win for a team to find out what their impact and the value proposition with a product like BlackLine. And more importantly, this is one of the key measures audit committee members asked me is, well, how do we reduce the risk when it comes to those high-risk accounts, and how do we know it's in alignment with what the PCAOB wants when the external auditors come in? Let's take a look at external auditor metrics for journal entries, just one piece alone. We know that there's a lot of inspection elements that the PCAOB is looking forward to, but I just wanted to highlight one important aspect of journal entries. Now, this is from a very big firm. This is public information, and I'm not trying to put out any names here, but I just wanted to share an example of what the PCAOB, a regulator, wanted to look at when it came to journal entries. Now, in this case, They have a public company that issued a report, and the auditors did audit the journal entries, but their failure was just limiting their review to just the sign-offs. Okay, what they really wanted the auditor to do was look at the level of precision. I highlighted that specifically because it's a new audit definition that really hones in on what exactly was the person who is preparing that document looking to as support. What were they looking for within that supporting documentation? Was it percentages? If so, what gives them heartburn? Is there a range? Is there a specific dollar threshold, et cetera, et cetera? BlackLine is a perfect complement to this issue that the PCAOB has been honing in on for years with external auditors to do a better job in auditing journal entries. So those certification statements are an easy win, and I'm just highlighting one inspection example, and trust me, there are dozens like this where the PCAOB has told the external auditors to do a better job when it comes to journal entry testing and the controls around those journal entries. Let's look at the CFO and controller metrics. They're looking at prioritizing the workload, right? High-risk accounts should be given probably a little bit more priority and time associated with it. They want smoother peaks in their workload. They don't want to feel like those last-minute journal entries keep popping up, or last-minute reconciliation or question items keep coming up on the 11th hour. Higher visibility. They want to see that not only do they see where everybody's at, but better yet, there's better cross-functional teams working together to get stuff done. There's usually, hopefully, little or no last-minute surprises. So pre-implementation versus post-implementation in terms of the impact to the staff, they should literally feel like there are very little to no last-minute rec surprises. Now, what does that really mean in terms of actual metrics and reports that they want to issue back to, let's say, the audit committee or other key executives? One is, what are the number of system recs? What are the number of batch journal entries that the system is creating itself automatically? Those are the things that they typically measure most and report back post-implementation. Final tips. One, always use task dependencies in your implementation projects. It allows, again, greater workflow, ease of transferring items to other folks. Leveraging groups to smooth the workflow is another way to not only get better visibility, but to share the workload and obviously avoid those high peaks and valleys when it comes to your close. Account risks. Those high-risk accounts, you should really leverage to the best of your ability those certification statements. Yes, preparers and reviewers can have two different statements. Talk to your implementation partner on what's the best use and how that ties and agrees to what your external auditors expect, and more importantly, what regulators are looking to look for. Leverage your control activities report quarterly and especially pre versus post implementation. This is a great accountability measure for everybody to figure out, hey, when we first launched this thing, where were we when we had certain system recs, and where are we, let's say, I don't know, 2 quarters after you implemented it. It gets the whole team to really move forward to optimize BlackLine. Also, BlackLine optimization plan, I'm a big fan of this. Once a year, at least, you should be looking at where can we take BlackLine in the general operations of the business, or better yet, maybe test out some of the new account rec templates. Maybe we test out a different module. Maybe we implement something new and integrate it into, let's say, parts of the M&A team or due diligence team that you guys have in your organization. Lastly, I wanted to say, please reward your staff on key milestones. Any implementation of a software package as robust as BlackLine, it deserves key rewards. Some people give out $5 Starbucks gift cards. Some of them have these launch parties. Some of them have post-implementation parties, etc. Some of the key metrics of giving little gifts or congratulating people, maybe it's a group email, is how many automation of recs have they done, the shortened close times, meaning in number of days, etc. Services page up and running. However, we do have a section called Insights. In it, there's a video explaining an ROI model that we created based on labor costs. It's free, you can download it. You do have to sign in to get the template. What I'm offering you today is a free ROI review using and leveraging this template in your own environment with me personally, Sonia Luna. You can reach me directly at 424-625-0241 or email us at info@avivaspectrum.com. And we hope that when you calculate your choices, you choose Aviva Spectrum.